Energy prices are rising, and they're rising for many of us around the world. But the effect of this does actually have an end result in raising metals prices. Let's get an idea now of what's going on and how we connect the dots up with John Meyer from SP Angel. John, welcome. We are all talking about this rise in energy prices, but I know that from some recent detail from you and your morning notes that you're able to connect this rise in energy prices through to a rise in metals prices through China. What's going on that gives us higher metals prices out of what's happening in energy?
Well, it's not just the UK that's been struggling with energy supplies, and the reasons are slightly different in the UK for the rest of the world. But it seems that in China, where the government similarly restricted, put a cap on the power price, that power utilities producing power from coal and other sources ran down stocks of coal and I think probably ran down energy supplies from other areas, particularly LNG gas, for example. And that's ended up restricting the power available for manufacturing industry and consumers in China. And so what's happened is the government is running around in a bit of a panic. They are protecting supplies for consumers because they're always trying to look after the population in China. And it's the smelters and refineries that are really struggling now. So the first to be hit and cut was aluminium production for the big aluminium refineries. And that the power that was going in there has been diverted to manufacturing industry, which is pretty busy in China at the moment. But also copper refineries, copper smelters, zinc, and we're concerned that they may also restrict power to rare earth refineries. So the Chinese government is also and inevitably going to prioritize power to metal, the availability of metal to domestic industry. And what this means is that metal exports out of China could start to hurt industry around the rest of the world. And what we're seeing is premiums for metal available in the United States, for example, have gone up a lot. And this says to us that metal is becoming really quite hard to physically get hold of. And as a result, we're seeing underlying metals prices rise as well.
One of the things about China, of course, is the fact that it uses a lot of coal-fired power stations. And we've seen an uptick, haven't we, in the price of thermal coal. This goes counter to anything that anybody's going to be talking about at COP26. But I guess this is all part of the same sort of situation that we're in at the moment.
Yes, I think it demonstrates that when it comes to providing power and ensuring that there's sufficient power for industry, that the concept of burning less coal goes right out of the window. So China, which had been holding back off coal imports from Australia, for example, has now started allowing ships that have been laden with coal and waiting at Chinese ports for 5 or 6 months now to actually unload that coal. And I'm quite sure they'll be buying in a lot more Australian coal. And as we've seen, the thermal coal price out of Australia has rocketed to close to $200 a ton now. So pretty much a doubling in thermal coal prices, in fact, more than a doubling over the last 12 to 18 months. And LNG prices have gone up much more than that. So China has actually said to its power utilities to source LNG, whatever it takes. And of course, when a government like China, with deep pockets as it has, says something like that, prices are just going to rocket, not just in Asia, but all over the world.
It's interesting, isn't it, when looking at what's happening at the moment? And the question has to be, is this just transitory, do you think? Do you think that all this will be sorted out at some point in the not too distant future? Or do you think that these higher energy prices are here to stay, ultimately bringing about the end result of those higher metals prices? I'm hearing this morning that President Putin is considering or pushing ahead, I know, with the negotiations for the big gas pipeline between Russia and Europe. And this is a political issue. And I think if that gets built, my understanding is that in Europe, at least, we'll have lots more energy at cheaper prices. Do you think that that's going to calm the entire market down and ultimately we're going to return to how we were?
Well, my personal view is that more pipelines, more interconnectors should create better energy security in Europe and ultimately reduce prices for everybody. But yes, I think we are in a transitory environment. LNG prices are unlikely to stay up at these levels. Thermal coal prices more than likely to start to settle back. And Chinese industry has ramped up a lot, partly because of the demand from the West for Chinese goods, partly as a result of the coronavirus, partly as a result of the stimulus programs to restart the economies. And so there's quite a lot of moving factors here, but I do see this inflationary effect as more transitory. But having said that, I don't think energy prices are going to fall back to the lows that we saw last year. I think they are going to settle slightly higher up. Even the Saudi Arabia are unlikely to want prices to settle back to those low levels that we saw.
Mm. Okay, all right, John, look, thanks indeed for joining us. John Meyer from SP Angel, taking a look there at the outlook for energy prices and, of course, ultimately, at the price of metals. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.